What we felt from our shareholders, what we feel ourselves, is that we need to have a balance. So we've got material shareholder returns where if we can hit the financial plans that we've set out, and we have every confidence that we can, we expect to return in excess of $5 billion to shareholders over the next 3 years. In addition to that, including the 750 that we're announcing today. Now, but at the same time, we are continuing to invest heavily in our business. So we will have almost a doubling of our strategic investment and an aggregate increase in our investment that will get into the 10% plus range from a reasonably high level. Why do we invest? Because our markets are growth markets. We're operating in across Asia, Africa, and the Middle East. Growth is good. The underlying business environment is good, and with some interest rate tailwind as well. These are markets and opportunities into which we want to invest, and our shareholders would expect us to do that. So we're balancing investment in our business with shareholder returns, and of course we'll continue to do that.
Bill, just briefly, you mentioned the issue of Chinese property and the impairments. Can you just flesh that out for us and just tell us what your exposure is at this point and how comfortable you are with where you are in your current level of exposure?
Yeah, we've disclosed exposure of a bit over $4 billion. A decent chunk of that is secured by high-quality property. There's an element that's unsecured. As I say, it's the unsecured exposure that the market is more focused on. For the most part, the China real estate sector, and certainly the names to which we've lent, are very solvent. In other words, their debt as a proportion of their asset value is reasonably low. What they're facing is a liquidity crisis. And that liquidity crisis is prompted substantially by government actions to tighten up the financial conditions around what had been a booming property sector. And we're beginning to see some easing of that tension. So some of the large developers, including some of the ones that we interact with, have been selling properties, typically to state-owned companies. And those property sales are going through at transaction levels that are more or less on market. So in other words, not at a deep discount. There's also a lot of the real estate developer cash is tied up in escrow accounts. And some of those escrow accounts are being eased in basically rules by some of the local authorities within the Chinese provinces. So we see some prospect of an easing of the liquidity crisis. We don't see a property market collapse, which leaves us relatively optimistic that we can see through this without a material impact on the market or on creditors. That said, with an abundance and out of an abundance of caution, we did take provisions in the fourth quarter, and we took an extraordinary overlay on top of those provisions, which leaves us feeling very, very well provisioned against what could go wrong, even if we remain quite hopeful that it will not go wrong.
Bill, a bit of a sting in the tail on this last question. I know to a certain extent you are somewhat vulnerable to the international market, but it's probably appropriate to say the stock's off 40-odd% since you took over the helm of this business. When do the shareholders get a turnaround on that story?
Well, I think the shareholders will get a turnaround on the story when we turn our actions into profits. Now, I'd like to think that we would get recognized in advance of the actual profits showing in the bottom line. I would still hope that we can generate enthusiasm, but our primary focus isn't on taking the actions that will pump up the stock price. It's rather taking the actions that will pump up our earnings and pump up our returns. And if we accomplish that, I have no doubt that the share price will follow. And I am very confident that we can accomplish that.